All right, so one more Thursday night session, mentorship live class. This is the 8th of August 2019. As always, we will be talking about the market view first, and then later on I'll take up each and every doubt of yours. I have purposely opened the chart of Nifty spot on TradingView, and I will do the market analysis using this platform. The reason being the fact that if you had noticed recently, I had shared my view on the current correction in 2019 using this chart, and I guess I had used the weekly time frame. There you go. This is the chart that I had shared, and the write-up and the video suggested 10,800 as the first layer of support, 10,400 as the next, and then the psychological 10K as the third level. In that YouTube video, I've clearly explained how I found out that these three levels may act as good layers of support. Also in that video, I mentioned that considering it's been a deep correction, 10,800 should hold. I've got some good comments on that YouTube video. If you've not seen that, I would definitely suggest you go through that, because in that video, I share how to draw Fibonacci retracements. So that's why I'm using the TradingView platform tonight, and I'll be using it to share my view what's next. So first is 10,800 is holding beautifully well. There's no doubt about it, about that. This is back to the weekly charts, and we've got a green candle after quite some time. This is the daily chart, where I see a nice move that we saw in today's trade, and this is that blue line which is holding the markets well. Now, how far can this bounce back go further up, and where can it face any degree of short-term resistance? As you can see on this daily chart, it's very clear that back here in the mid-May this year, there was this cluster. It found some support and it gave that bounce back. This cluster support was broken quite comfortably recently. There was no sign of the market showing any sign of demand or buying at this level. So whether this level will act as a resistance or not is really doubtful. I really doubt whether this 11,150, 11,120 will give us any kind of resistance. I doubt it, because when the time had come for it to give support, it did not. So the market in this time frame, in this current state, is not too inclined or keen to respect this level. I'll mark it for you so that you exactly know which level I'm talking about. I'm talking about this level. So I'm not too sure whether the market will support this level or not. I'll keep it for the time being. And now I'm going to take you to one time frame lower, because we're looking at a bounce back. And this is a line chart. And the nice thing about tradingview.com is it actually allows you a lot of things. So one thing for all our mentorship students who have joined, and if you use tradingview.com, you would know that I make it a very strong point that whenever you look for any form of divergence, always use the line chart. And in our course, we have categorically explained why the line chart and why not the bar or the candlestick chart, right? Paying the maximum amount of respect to the closing price. One. Now you'll notice this is not just an ordinary line chart, and over here, as I right click and go to settings, I have under the type, I've not kept it simple, I've kept it with markers. This is really, really interesting, because tradingview.com does not give us the line chart in dual color. What is dual color is this. This is the Iris Plus software that we use, and you can clearly see this is the dual color, the red and whatever. I've used black here. That is not the case with TradingView. So if it's not the case with TradingView, and if I just show you, go to settings and change it to simple, you wouldn't know in this fall, you wouldn't know in this rise whether this was a negative bar or not, whether this was a negative close or not. In this entire fall, if you zoom, you wouldn't know if this was a positive candle or not because it's not color coded. So there's a walk around and I make it with markers. Now I know which are the high points. Now I know between these 2 points which is the lowest point. Now I know between these 2 high points which is the higher point. So it makes my life really, really easy to compare for divergence. Do use this with markers on the line chart if you're using tradingview.com. Now this is one time frame lower. As you know that we always drill one time frame lower. From the daily, I've now come down to the 75-minute chart, and I will not go any further because now I am my search, my objective on this chart is if this guy is going up, this price which is at 11,048, where is it likely to face resistance? Now, like I had created RSI driven channels and Fibonacci on the weekly charts, which was this. The logic being the price channels drawn from the levels of RSI and Fibonacci. The same concept I have utilized in the 75-minute chart, and I have these two channels. It's a very interesting chart. One thing I must tell you, when I was carefully studying this 75-minute chart of the Nifty since the fall of early June all the way till early August, I actually did not find any relevant strong NHD. And for that, I'm using the RSI 14. What does that mean? That means that this is not a very weak market. Going forward, now that we are going to have a bounce back, we already have one in our hands. Now, if it forms any kind of meaningful NHD, then it might give us some signal, all right, this market is weakening. But mark my word, as of now, 75-minute charts does not suggest that this is a weak market. It's surprising considering the sharpness of the fall, but that's what the study suggests. Now, what I have on my chart are two such price channels that I've managed to draw with the help of RSI 14. Let's first start with the smaller one. This is the smaller one, which has been nicely broken out. And I have used the Fibonacci retracements over here. And currently, it has stopped at the 50%, which is at 11,050. 11111, which is 61.8%, and 11,200 is the 78.6. Now, I have a lot of respect for the 78.6. In my career, earlier when I used to use a lot of Fibonacci in my studies, a lot actually, I only do it now when there is a meaningful correction or rise in the market. This 11,200 is at 78.6 retracement. Now, for me, this is really strong. Why? Why? Because the other larger channel that I found from the 75-minute chart was this blue one. We've got some degree of excesses. These are essentially excesses when the market does a little bit more than anticipated or expected. But this is what I get, this channel. And I like the lower border of the channel more because it's got beautiful touches multiple times. It broke, it gave resistance. So this, in this channel, this lower line for me makes more sense than the upper. I don't have any other channels that I can draw. Maybe next week, if the markets give me a good opportunity, then I might have the third RSI channel or the channel based on RSI. So if you if you zoom in, you see that the 78.6 is actually coming very close to this lower border, which is 11,200 level. So I think that this is the range where this rally, this bounce back from a short-term point of view can take the market to. This was discussed in the first video, where I did mention that 11,200, 11,250 is where the market can take us. And I sense that considering today's nice sharp move, there is a high likelihood that we get a test of this 11,200 level for the Nifty. Short-term momentum has picked up. The daily charts, now let us go back to the daily chart. Look at the chart on my left, and I will now bring in our usual indicators. The trend is down, the momentum is improving. You can see that with our AO settings at the bottom. RSI, we've got a name down here. The RSI short term is picking up. So I sense that this range, what we were discussing at the initial stage of today's class, this lows, 11,200 a little higher, which is the beautiful thing about trading view is over here. You see, I have got this template on, which is the dual screen. I get the dual screen because I am on the pro version. And what I've done is I have synced the crosshair. Now look, I'm on the right-hand side chart, okay? On the right-hand side chart. And I put my cursor on this 11,200 level. If you look at the left-hand side chart, the crosshair is actually changing, is synced, right? So I exactly can see where it is on the daily chart. So there you see it's slightly higher than the zone that we have drawn here. So this is where 11,200 lies. There you go, 11,200. I love this kind of subtle intelligence, and there are many such subtle intelligence in the tradingview.com platform for sure. And I'm seriously giving it a try, and I'll dedicate this to one of my YouTube followers, who had a nice comment on one of my videos saying that this course or this program is only for those who can afford the program and can afford the Iris software. He said it right, but I realized something, that I cannot be software specific, and the strategies should be implemented in at least couple of or 2 to 3 different softwares which are affordable. So I'm giving it a good try and a good effort so that all our strategies can be easily implemented on tradingview.com. As of now, it's working well. Whatever I find out, I will be posting it in my YouTube videos. Now, let's conclude the analysis. We are reading the market well, or the market is behaving as per our anticipation. 10,800 holds good. We have our anticipated bounce back. 11,200 is what we are anticipating bare minimum, or that is where the first layer of supply will come. Look at the 75-minute chart, and I conclude that I don't see serious weakness on this chart, which means that if 11,200 is taken out on the upside, we might get a surprise rally further up. Will it be 11,400, 500, 600? That time will tell us. But for me, 11,200 is important on the upside. If I see supply coming in from 11,200, that is the market turns down from 11,200, then I think you should be prepared for a retest towards close to that 10,800 mark. I say that because when you look at the daily chart, let me zoom it out. When you look at the daily chart, this was the sheer pressure of selling, and many traders, many market participants did not get the opportunity to get out. They might use this to lighten their position. Time will say, time will tell that, but as of now, we are short-term cautiously bullish, 11,200, intermediate 10,800 on the downside. So that's my analysis, that's my take on the Nifty. Now let's open the floor. As always, please key in your doubts and questions and the trades that you've done. Share them with me. If you have any doubts and questions, key them. I will take up one by one each and every of your doubts and clear up all our doubts for our mentorship traders. All right, let's start.